Good morning, dear students. So we were doing with joint venture. So in joint venture, you know what is joint venture and definition, features and all. So and we also solved the sums or the problems regarding when separate set of books are maintained by joint venture. So how was it means when A and B are joint venture means this A and B other than their own businesses they will be maintaining a books of accounts separately for the case of joint venture. So they will be maintaining the books of account separately for joint venture. Next we are done with this. So we know what are the journal entries and we need to prepare three kinds of ledger accounts. One is joint venture account, co-ventures account and joint bank account. So next coming on to now we will be starting with when no separate set of books are maintained for joint venture. So when is this case, when does this case arise means, so here as this is the example, A and B are co-venturers. So here what happens in this co-venturers, so joint venture will be only for a limited period, that may be 3 months or 4 months. So something that is a limited, this is not a particularly, so this is just an example. So 3 months or 4 months. At that time, these co-venturers could not maintain separate set of books of accounts, and it's a lengthy process, and they need to appoint an accountant for that. They need to have a separate office for that. So it takes lot of time and it consumes lot of energy. So what happens here, this co-venturers decides. So in this case maybe this A is an building constructor, so he has a separate office, he stays in Mumbai, and this person B is so he has some other business other than this joint ventures, he is doing some other business, he stays in Bangalore, A stays in Mumbai, B stays in Bangalore. So they both are in different geographical location and joint venture is for only 3 or 4 months. At this time what happens, any one of the joint ventures, not both of them, any one of the joint venture will prepare the books of account. So here, so when in this also we have two cases. So here you can see it is divided into two cases. When each co-venturers maintain joint ventures along with other co-venturers account. So I am saying about this, when each co-venturers maintain joint venture account along with other co-venturers account means, so here for example A will maintain the books of accounts, he will be maintaining books of account for his own business, for his own permanent business he will be maintaining a books of account. Plus that he will maintain the books of account for joint ventures own business jotege he will also maintain the books of account for joint venture. So what he will prepare, he will prepare joint venture account and you need to prepare co-ventures account. Co-ventures account means B's account. He will prepare what account? Only two accounts will be prepared. In this case you will not be arriving at a joint bank account because along with A's own account is preparing joint venture account. So all the money will be debited or credited from this person A's account itself. So if in the case A is preparing the joint ventures accounts, books of accounts is prepared by A. So for take example, A will not prepare books of account, he will give all the responsibility for B. At that time what happened, B will prepare joint venture account plus A's account, A's books of account, that is co-venturers account. So this is the first case. What it comes here, general entries will be there and ledger account only will be two cases. One is joint venture account and co-ventures account. So here on the other side, when both the co-venturers maintain the books of accounts and memorandum of joint venture account. So here we will be preparing joint memorandum joint ventures account and co-venturers account. In this case what happens here, we will prepare in here the A and B will prepare, both of them will prepare the merged memorandum of joint venture account along with joint venture account with B's account. Here what A will write is joint venture account with B. The B will write as B's account with A, joint ventures account with A. So I'll save the format regarding that later. So I hope you have been understood with this basic concept. So next coming on to, I'll be only saying about A. So this one, when each co-venturers maintain joint venture account along with other co-venturers. So at that time journal entries will be like this. So you can see when no separate set of books are maintained for joint venture, when each co-venturers maintains joint venture account along with other co-venturers, first part. So in this journal entries, as you can see, when cash or goods introduced to joint venture. So here the entry will be joint venture account data to cash or bank account. Why is this no joint bank account over here? Means in this case, when no separate set of books are maintained, the company or the co-venturers will not open a joint bank account. Only who is preparing account. For example, one person is ready to prepare account means from his bank account only all the money will be debited and credited. So there are no term of joint bank account when no separate set of books are maintained. As you can see, we'll be debiting in joint venture account, that is cash or goods brought is expenses, so we'll be debiting in the joint venture account all debit all expenses, credit all income. So we'll be debiting in joint venture account, same wise we'll be crediting from cash or bank account. So cash or bank account is a real account. What is the role of real account? Debit what comes in, credit what goes out. So when you purchase the goods, the money will go out, so to cash and bank account. Okay, this is when goods introduced to joint venture account. Similarly, when goods are purchased from own stock, as you can see, own stock means if here one co-venture is preparing the account, so ಇಲ್ಲಿ A and B ಅಲ್ಲಿ A prepare ಮಾಡ್ತಿರೋ ಅಕೌಂಟು ಅವ್ರ ಓನ್ ಸ್ಟಾಕ್ನ ಏನಾರ ಇಂಟ್ರೊಡ್ಯೂಸ್ ಮಾಡಿದ್ರೆ, ಅವ್ರ ಬಿಸ್ನೆಸ್ಸಲ್ಲಿ ಇದ್ದಿದ್ದ ಸ್ಟಾಕ್ನ ಏನಾರ ಜಾಯಿಂಟ್ ವೆಂಚರ್ಗೆ ಇಂಟ್ರೊಡ್ಯೂಸ್ ಮಾಡಿದ್ರೆ, ಸೊ ಎ ಏನಾರ ಅವ್ರ ಓನ್ ಬಿಸ್ನೆಸ್ ಇರುತ್ತಲ್ವ ಆ ಬಿಸ್ನೆಸ್ಸಿಂದ ಜಾಯಿಂಟ್ ವೆಂಚರ್ಗೆ ಗೂಡ್ಸ್ನ ಸಪ್ಲೈ ಮಾಡಿದ್ರೆ ಏನು ಎಂಟ್ರಿ ಬರುತ್ತೆ? ಜಾಯಿಂಟ್ ವೆಂಚರ್ ಅಕೌಂಟ್ ಡೇಟಾ ಟು ಪರ್ಚೇಸ್ ಅಕೌಂಟ್. ಸೇಮ್ ವೇ ವೆನ್ ಕ್ಯಾಶ್ ಆರ್ ಗೂಡ್ಸ್ contributed by co-venturers, so other co-venturers, so in this case B is the other co-venturers. As example, A is preparing the books of account, B will be the other co-venturer. So when this co-venture, when B is contributing, what happens? Cash or goods, joint venture account data to concerned co-ventures account. When you prepare B's account, then you need to credit there. So this is when cash or good contributed by other co-venturers. So next, coming on to any expenses paid. So expenses paid will be, obviously expenses will be debited in joint venture account and it will be credited from cash account or bank account. So joint venture account data to cash or bank account. So when expenses paid by a co-venturers, so here the other co-venturer is B. When B pays the expenses, what happens? Joint venture account data to other concerned co-venturers account means you can write, for when we take the example, to B's account you will be writing. So next, coming on to when goods are sold for cash. So when you sell the cash, what will happen there? So the money will be coming in, so it will be debited in the bank account or the cash account. Debit, cash comes in, so cash or bank account data to joint venture account you will be crediting, right, in joint venture account into credit. So okay, next, coming on to when goods sold on credit basis. So here when you sell the goods on credit basis, the entry will be, that is joint sundry debtors account data to joint venture account. So here next, coming on to when goods are sold by co-venturers. So if other co-venturer sells the goods on his own behalf, if he takes the responsibility of selling the goods, that time what happens? Concerned co-venturers account data to joint venture account. So for example, here A is maintaining the books of account, B is the other co-venturer. So what happens? Whatever the product has been developed from joint venture, B will take the responsibility of selling those products. That time the entry will be that is concerned co-ventures account data to joint venture account. So next, coming on to when cash is received from debtors, cash or bank account data to sundry debtors account. So cash will cash will be coming in, the debtor will pay the money. So debtor is someone who needs to pay for the company, right? That person will pay for the company. That time cash is coming in, you will be debiting all the income, you will debit the income. So cash or bank account data to sundry debtors account. So when discount allowed to the debtors or bad debts on debtors. So for example, if we give some kind of discount for the purpose of sale, so what happens? What is the entry for that? Joint venture account data to sundry debtors account. So likewise, when coming on to when cash or bills receivable received from other co-venturers. So for example, cash has been received from other co-venturers means cash or bank bills receivable account data to concerned co-ventures account. So when cash or bills payable issued or given to other co-venturers, when we pay for other co-venturers, when a company need to pay for other co-venturer, that is for example in this case if it is for B means other co-venturers account data to B, that is cash or bills payable account. When commission or salary is receivable, so if we are supposed to give salary for anyone, if we are supposed to give salary commission for anyone, if the sale has been made, if on that sale if the commission is payable, means what is the entry for that? Means joint venture account data to commission or salary account. When unsold stock is taken into stock account, so unsold stock has been debited to stock account, means stock account data to joint venture account. So you need to see this, you need to follow the formats, you need to see what there is nothing that you need to write one after the other, this format itself. So whenever that terms occur, so example in the question says commission has been paid to Mr. B, so what time what is the entry will be passing? So joint venture account data to commission or salary account. So you need to record like that. So whenever the term occurs, so for an example, if the unsold stock has been taken over, that time this entry has to be passed. Right, you need to understand why we are debiting and crediting. So it all depends on all the entry we are passing here. It is all similar to the three accounts we have been preparing. One is personal account. We know that three accounts are there. That is the three kinds of account we need to prepare. One is personal account, real account, and nominal account. You need all the journal entries will be prepared according to that itself. So when unsold stock taken over by the co-venturers, so if the co-venturer decide to take any remaining stock, so after selling some goods there might be some kind of remaining stock. If the co-venturer decide to take that remaining stock, what will be the entry? Co-venturers account data to joint venture account. When there is a profit in joint venture, so see here properly, this is different. No separate, when separate set of books of accounts are maintained and when no separate set of books of accounts are maintained, the journal entries are completely different. Other than one or two, every journal entries differs, and even the ledger account differs a lot. You need to see that. So next, coming on to this one, profit in joint venture. If it is cases profit, what is the entry for that? Joint venture account debit. So profit will always return on debit side of joint venture account. 2, profit and loss account. So why is this profit and loss account? Means as we all know, A is, in this example, A is preparing books of accounts, B is the other co-venturers. So if it is a profit, as this person is itself preparing the books of account, he will transfer it to his profit and loss account only, and then remaining whatever the share it is, he will share it for other person B. So here will not be like when a separate set of books are maintained, means when it is a profit, means to A account to B account we will be writing, but in this case to profit and loss account, because this person itself preparing books of account from including his own business, right? So why first will transfer to his profit and loss account only, will transfer directly, and this person and whatever the share is for B, you will transfer to co-venturer account. So next, coming on to when loss in joint venture. So if it is a loss, they need to pay money. If there is any payment of money is to be made, that a joint venturer and this A person need to pay the money, right? So at that time what happens? Co-venturers account data to profit and loss account. Same way, then to joint venture account. So next, if there is a final settlement, even after payment of all the kind of expenses, even after payment of the money which is to be given to the co-venturers and taking after the profits, if there is any surplus remaining, then what is the entry for that? When balance of settlement is to be received from other co-venturers. When in case of joint venture gene inna amount ಬೇಕಿದ್ರೆ, if the joint venture is itself required to other amount, if it is that time what happens? Cash or bank or bills receivable account data to concerned co-venturers account. That person, whoever the co-venturer is, that person need to give the money for the joint ventures. So for example, there is a surplus value at that time in the joint venture, even after payment of profits, there is a surplus value we need to give for them. So that time concerned co-venturers account data to cash or bank account. So this is all about the journal entries, that is when that is A point in the when no separate set of books of account allu ಎರಡು part ಇದೆ ಅದರಲ್ಲಿ first when each co-venturer maintain the joint venture along with other co-venturers, right? So these are the journal entries. So next, coming into ledger account. So ledger accounts, when the two ledger accounts will be prepared, one is joint venture account and another one is co-venturers account. So let's come with what is the joint venture account. Regarding the joint venture account, so here only two ledger accounts will be prepared. One is joint venture account and the other co-venturers account. So going on with joint venture account, in the books of co-venturers, joint venture account. Done. So particular rupees, please remember to write debit and credit. Next, coming on to cash or bank account, cash or goods introduced. So when separate set of books are maintained, this part was not there. So if the other co-venture, so for example here in this in the example, if I take, if B is giving the cash means, so what happens if case of when separate set of books of account, in co-venturers account we will be writing on a credit side, but when no separate set of books are maintained, so you will be writing on a joint venture account. What is that? Debit side to cash or bank account, that is cash or goods introduced. Run. So next is own goods introduced. So for example, A is introducing his own goods into the joint venture. So he is maintaining the books of account, he is introducing these own goods to purchase account, that is own goods introduced. So next is to co-venturers account, that is goods introduced, cash or goods introduced. So this is next. Coming on to the cash or bank account, expenses paid. If any kind of expenses paid from this person, from A has paid any expenses means from his bank account, we will be writing as cash or bank account. So co-venturers account, if B has been paid any kind of expenses means, so that will be recording as to co-venturers account. If discount has been allowed to debtors means to sundry debtors account. So if it is a profit means, as you all know from the journal entries, so I will be debiting here in the joint venture account to net profit carried brought down, that is balancing figure. So profit and loss account. So if this profit and loss account, this for A, this share is for A. So whatever the value of profit may be, we need to divide among the co-venturers. So why is this profit and loss account means this share of profit is of A. Right. Next is B account. For example, if you take this example, it is B account to co-venturers. So next, coming on to the credit side of the joint venture account, it is simple, it is similar. So all the sales made. So we need to write when separate set of books are maintained, what we were recording by joint bank account was recorded, but in case of only A is only preparing the books of account along with these his own business, so all the profit will be transferred to A, that person. So cash or bank account, that is sales made. So co-ventures account, sales made. So for example, what happens in joint venture, goods has been produced. So here what happens, B will take the responsibility of selling that particular goods. That time B has been made the sales, so we need to write down. So co-venturers account, debtor. So if we credit over here means, similarly in the co-venture account we need to debit, right? So next, coming on to by stock account, unsold stock transferred. So if there is any unsold goods brought by the person who is preparing the books of account, if it takes any unsold goods means, that we need to record. So you can understand like this. So for example, goods has been introduced by A, we will be recording as two purchases, right? So likewise, whatever the goods has been brought by A, he is preparing the books of account from his own account, from his own business, he will be introducing some goods, right? So from that goods any stock is remaining means, by stock account we will be recording. So other than his own stock, if any kind of goods has been remaining means, what will be recording by co-ventures account, unsold goods taken over. Right. Next, coming on to by net loss carried down. So next, loss carried down. If it is a loss means profit or loss account, obviously to co-venturers account. So this is all about the joint venture accounts in the books of co-venturers joint venture account. This is when no separate set of books has been maintained means. So next, coming on to co-venturers account, as you all can see here, what will be recording, all we have written joint venture, joint venture. So you have written in the red pen, you can see, you need to mention it even while preparing the co-venturers account. It is good, it is obviously good to mention what is the entry you have been recording. So all it will be joint venture, joint venture, it will get confused. So you can write by joint venture account, bracket, goods introduced, close the bracket, and what is the amount. So you should read like this. So by joint venture account on the credit side, see, debit, credit, you need to remember to write this. So by joint venture account, So cash or goods introduced. So if this person co-venture, if it is for a B account, example I am taking, if it a B is introduced any goods, means we need to record. So if B has paid any expenses, means by joint venture account expenses paid by B, by joint venture account profit transferred to B, right. So next, coming on to the debit side. So joint venture account, if this person has made the sales, so he has taken the responsibility of making a sales, means to joint venture account sales made. So if this person has taken any kind of unsold stock, means we need to record, right, to joint venture account unsold stock turnover account. So if it is a loss, if it is a credit side in the joint venture account, it is a loss. If loss has been given, means to joint venture account loss transfer, right. This is all about co-venturers account. So next, coming on to here, when both the co-venturers maintain the books. So here both the co-venturers will separately maintain their books of account. So here no journal entries, as so it is similar to the when co-venturers maintain the separate, when here this person, if A is maintaining the books of accounts, this journal entries will be same. But when it comes to the ledger accounts, memorandum of ledger account, memorandum joint venture account, this memorandum of joint venture account is one and the same like this itself, this joint venture account itself. So next, coming on to co-venturers account, means it is quite different. So I'll be saying how this is different from this co-venturers account while doing the sum. So this is all about the introduction to when no separate set of books of accounts are maintained. So hope you have been understood with this much. Next, yeah, thank you so much.